welcome to this discussion on China. We're going to talk about recent events, the portfolio, and introduce you to Linda Lin. Linda is a partner at Baillie Gifford who has recently returned to Edinburgh after a number of years in our Shanghai office, and she'll be joining me as co-manager of the China Growth Trust. I'm Sophie Earnshaw, one of the managers of the China Growth Trust and the China Fund. This year is the 30th anniversary of Baillie Gifford's first investments in China on our client's behalf. I've been managing the China Fund for a decade now, and have worked closely with Linda over the years to evolve our approach to China. An important part of that was the opening of our research office in Shanghai in 2019, which Linda has run for the last 4 years. Linda, perhaps I can begin by asking you a bit about your experience in Shanghai and the role that the research office plays.
Thanks, Sophie. It's great to be settling back into Edinburgh, and I'm excited to join you on the trust. Before I deep dive into Shanghai, it's perhaps a good thing to highlight being in Edinburgh is not a new thing for me. I joined Baillie Gifford in 2014 and spent much of my time working with our long-term global growth strategy here in Edinburgh before I moved there to set up our office. This has clearly been an exciting time to develop our approach in China. But I see the evolution of one delicate China team as the next step, and that's what brought me back. There are a number of benefits to our Shanghai office, but perhaps to say first, since we opened it, we continue to add the resources there, with 2 new investment graduates joining us in the last 2 years, as well as a delicate ESG analyst. So I'm back now, but we still have a team of 7, with Rio 2, who has been with Baillie Gifford for a decade, is in charge of the local team. Taking a step back, one of the most difficult things to invest in China is a very short-term focus of most market participants. Our key advantage is to bring the long-term and patient process to the investing, which allowed us to ignore the short-term fluctuation and focus on the long-term, innovative, and secure trend, which we hope for to generate the return for our clients. As a result, we didn't really open the Shanghai office in the financial center of Shanghai. It helped us to get closer to some growth companies in China in the future, and also start building the relationship with them at the early stage. Digging deeper into the China-Asia market, which is fully covered and researched, especially in English. And also, we get opportunity to talk to private companies with huge opportunities in the future.
And one of those companies is ByteDance. I think one of your biggest strengths is your ability to forge really strong relationships with founders and leading companies within China. Do you think you could say a little bit about that in relation to ByteDance? As you know, it's the largest holding within the China Growth Trust.
Sure. We started research ByteDance in 2017 and have been learning from the founder Zhang Yiming and his team since then. I still remember in 2017, it has launched the most popular mobile news app called Toutiao in China. It got around 100 million daily active users, but after almost 7 years' time, it has become one of the largest global social network, owning the super apps like TikTok and Douyin, and it has achieved 2 billion daily active users. And this has been an exciting journey with this company. And I know our China Investment Trust became a shareholder of this company in 2020.
So what will happen to those relationships now that you're back in Edinburgh?
I think our relationship with Chinese companies go far beyond my own connections. In China Fund, for example, we start owning ENN Energy and Tencent since 2008. And now we have a team in Shanghai. And on top of that, in Baillie Gifford, we have more than 80 investors who has China in their EM, international, and global remit, which helps us for the idea generation, as well as bring the global perspectives to our debates on Chinese companies. And also being on ground really help us to deepen our third-party relationships. For example, our relationship with Shanghai Jiao Tong University, UK, China Low Carbon School, and also Huisen Consulting. But this actually really builds on the relationship was what has gone before. For example, the due diligence provider, FASM, and the policy advisor, Trivian, which helps us to identify some of the opportunities as well as mitigate downside risk for us. Speaking of the risk, we have been very cautious in the last couple of years. China has a difficult situation, and with the index down significantly, and our performance has been behind. I understand this has been a painful period of time with many in the trust. So what's your thought about this, Sophie?
Yeah, it's been a really difficult, painful time for investors in the trust, and also for, I think, everyone that's been invested in China over the past couple of years. There's really three main drivers, I think, behind the very weak absolute performance. So firstly, the domestic economy, secondly, regulation, and then thirdly, geopolitics. At this point, it's probably worth just reiterating that we are bottom-up stock pickers. So we own, a portfolio of around 60 stocks out of a potential universe of 6,000. But over the past couple of years, it has really been the big picture that's sort of driven returns. On all three of those points, I think the outlook is looking a little bit rosier, a little bit better. So in terms of the domestic economy, it's really property that's been very weak, but we're now seeing the government really starting to address this seriously. When it comes to regulation, I think we have now turned a corner and we appear to be in a more normalized regulatory environment. And then thirdly, on geopolitics, I think this will remain a headwind, but it does look like things have stabilized, at least from a low base. I guess even more importantly, though, the companies that we're finding still have big growth opportunities ahead of them. And some of those growth opportunities are independent of the broader macroeconomic outlook. So one example here, a company that I know you're very, very familiar with, PDD. So this is an e-commerce company. It's actually grown its revenues by 94% in the most recent quarter, and it's opened its app Temu in over 55 different countries.
Yeah, and I have met a private company called Xiaohongshu, which is a leading social media company in China. It takes them less than 10 years to reach a 300 million scale of months active users. And in the last 2 years, they grow their revenue and profitability significantly.
Wow, yeah. And I guess, the companies that we have in our portfolio, they are really exposed to what's going to drive China over the next decade. So consumption, automation, digitalization, a whole host of issues. And they're not really exposed to a lot of the things that make the headlines. So property, financials, utilities.
I think many people are spending too much focus on the macroeconomy environment. But at the end of the day, there are still lots of wealth being created in the second largest economy and the second largest capital market in the world. There are still a number of companies that will benefiting from this big trend. That will continue regardless of the economy backdrop. And we should focus on those opportunities.
And that's true even over the past year, where the companies that we own in the portfolio have continued to deliver very well operationally. But we've seen share prices really diverge from fundamentals. And that has been painful, as a lot of the companies that we own have derated. But at the end of the day, from where we stand now, we have a portfolio of companies exposed to very big growth opportunities that are now actually very, very cheap. I'll give two examples. CATL, so this is the world's largest EV battery manufacturer. This is a company that's grown its revenue and profits over 10 times over the last 4 years, but it's now only trading on a price-earnings multiple of around 15 times, meaning that the price we're being asked to pay for this company's growth is very, very low. And the same goes for Meituan, a company that in the most recent quarter grew its revenue at 20%, and yet, similar to CATL, is only trading on less than 15 times forward price earnings. So valuations are looking very attractive, but it's not just about valuations. It's about finding those companies with those big growth opportunities. And that's really what our day-to-day job is focused on. But I think here maybe it would be useful or helpful if you could just reiterate the approach that we have to investing in China. I know it's an approach that you've been instrumental in developing.
Sure, I think it will be super helpful for us to emphasize the 3 key points from that approach. I think firstly, we have a very different time horizon, which allowed us to stay patient and explore the market efficiency in a market dominant by the shortalism. And secondly, we're looking for different perspectives, which means that we are searching for the opportunities which are really benefiting with the long-term and secure trends. I think lastly, we have a very different focus on the upside, means we can invest into some of the growth companies that others may miss. I think there are some interesting numbers that helps us. For example, China has already been the largest industrial robotics market globally. But when we're talking about the robot density, China only accounts a third to some countries like South Korea. And in the next 10 to 20 years, there's a huge upside in these areas. And secondly, perhaps for someone who likes to have a drink, Chinese people drink baijiu more than the rest of the world drink whiskey, vodka, gin, rum, and tequila.
Wow.
And this type of opportunities that for the investor globally, you can only find in the Chinese Asia market. So as a result, we more focusing on the discovery process rather than simple coverage. And we will look at those areas China is turning the taps on.
Yeah, I mean, as you say, China does still have some long-term challenges, ESG, geopolitics potentially, a slowing macro. But I also think, as you're implying, it's really important to remember some of the real-world forces that are still happening that haven't changed over the past couple of years that could be really impactful. So things like, renewable energy costs continuing to fall, factory automation continuing to increase, or Generation Z becoming an increasingly important consumption driver. I could go on and on. So it sounds like we're in agreement, I think, and maybe this is a good point to conclude on. If you look forward rather than backwards, we think we can still see a China that's very much likely to grow as a result of innovation, consumption, automation, digitalization. And for us as curious stock pickers in both Edinburgh and Shanghai, actually it's quite a lot to be excited about.
Yeah, totally agree.
Yeah. So thank you, Linda. Thank you today for joining us for this discussion on China.
Thanks, Sophie.